What's up, future investors? Tired of watching others build wealth while you sit confused on the sidelines? Today I'm breaking down stock market basics in the simplest way possible. No jargon, just real talk about how you can start building wealth. Let's dive in. What is the stock market? Think of the stock market as a giant marketplace, but instead of buying apples or shoes, you're buying tiny pieces of companies. It's where businesses and investors meet. Companies need money to grow, and investors want to own profitable businesses. The stock market makes this exchange possible. The two biggest stock markets in the US are the New York Stock Exchange and NASDAQ. Together they host thousands of companies worth trillions of dollars. How does it actually work? When a company goes public, it offers shares through an initial public offering, or IPO. Let's break this down with actual real numbers. Real example, Airbnb IPO 2020. Airbnb went public in December 2020 at $68 per share. On the very first day of trading, it jumped to $146. That's a 115% gain in just one day. If you invested $1,000 at the IPO price, you'd have bought about 14 shares. By day's end, your investment would be worth approximately $2,044. That's over $1,000 profit in 24 hours. The two ways to profit. Method 1. Price appreciation. Buy shares when they're cheap, sell when they're expensive. Simple math. You buy Microsoft at $250 per share. 6 months later, it's at $300. Here's the calculation. If you bought 20 shares at $250, you invested $5,000. Selling at $300 gives you $6,000. Your profit is $1,000, which is a 20% return in just 6 months. Method 2. Dividend income. Some companies pay you just for owning their stock. McDonald's, for example, pays quarterly dividends to shareholders. Let's do the math. Say you own 200 shares of a company paying $4 per share annually. That's $800 in dividend income every year. If each share costs $100, your $20,000 investment generates $800 annually, a 4% dividend yield. Hold those shares for 10 years and you've collected $8,000 in dividends alone, plus any stock price appreciation. Understanding risk and volatility. Markets move up and down constantly. This is volatility, and it's normal. Real example, COVID-19 crash. In March 2020, the S&P 500 dropped 34% in 1 month. A $10,000 investment became $6,600. But by August 2020, the market recovered. By end of 2021, that $10,000 was worth about $16,000. Panic sellers locked in losses. Patient investors saw incredible gains. The magic of compound interest. Einstein called compound interest the eighth wonder of the world. Here's why. Invest $200 monthly in an index fund averaging 10% annual returns. After 1 year, $2,520. After 5 years, $15,528. After 10 years, $40,969. After 20 years, $151,874. After 30 years, $452,098. You invested $72,000 total, but have nearly $452,000. That's compound growth. 4 essential rules for beginners. Number 1. Start now even with small amounts. Time is your biggest advantage in investing. Number 2. Diversify across different companies and sectors. Never put everything in one stock. Number 3. Invest consistently whether markets are up or down. This is called dollar cost averaging, and it works. Number 4. Focus on long-term growth, not short-term gains. The stock market rewards patience above all else. How to start? You don't need thousands anymore, and multiple apps those let you start with $10. Many apps offer fractional shares. You can buy 0.1 shares of expensive stocks like Amazon. Download investing trusted apps. Many require no minimum deposit. Start with index funds like the S&P 500, which tracks America's 500 largest companies. Consider ETFs. Exchange-traded funds. They're baskets of stocks in one purchase. There you have it. Stock market basics anyone can understand. Every wealthy investor started as a complete beginner. They took action and stayed committed. If this added value, hit like and subscribe for weekly investing content. Comment your biggest stock market question. I read every one. Until next time, invest smart and stay wealthy.